Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. 3 weeks ago I said, and I quote, "I think we have a mid-April to date somewhat lopsided double top pattern, an Adam and Eve type. We have broken down through the key 605 and a quarter level, so I'll lay out some potentials below. Not targets yet, but potentials, as we haven't fully stabilized below the 605 level. Thus a primary potential down 561.5 zone, just under the long moving average, which is currently at 573 even. And a secondary hardest reach potential would be down in the 518 and 3/4 zone, just under the 38.2% absolute Fibonacci line at 521 even. It all now depends if prices can keep the momentum going lower, especially under the 588 to 594 and 3/4 zone, 594 and 3/4 congestion." And that's the end of the quote. Then last week I said, and I added to this, and I quote, "Nothing on this view has changed since then. I still have them down as potentials below and will still continue to consider them as potentials because it is obvious to me, or to anyone right now, that though we are below this key 605 and a quarter level, we still have not yet stabilized under this key 605 and a quarter level. I would only add this week that I am now starting to look at the whole June action as a possible hesitation and a bearish halfway hesitation. I'm still wondering if it might also be a diamond pattern." End of quote. Oh, sorry, and one more piece. "It is too early to tell on Evo right now." End of quote. Well, today became obvious that we had a June and early July based diamond bottom pattern, highlighted now in bright pink on my daily chart, for close yesterday outside and on top of the pattern, and today a strong move higher through the green short medium moving average, currently at 623.5, and the 50% Fibonacci line, a May 24 to May 25 move at 622 and a quarter. This is now the dominant pattern, replacing the stalled double top. Thus, for the diamond pattern, we have a primary target, X up in the 653.5 area, close to the 50% Fibonacci line of the March 24 to May 25 move, which incidentally is the next resistance overhead, followed by the secondary harder to reach target X1, up not too far beyond target X, up in the 667.5 area. Only a significant pullback below the green short medium moving average would cast doubt on this pattern, though as always it may still be hard and take some time to reach the topside targets. Chicago corn. The break lower 6 weeks ago was created by a pattern I warned about, a mid-April to late May double top. I said back then, I quote, "The depth of the move lower has prompted me today to start laying out some potential targets. Only potential targets right now, but potential targets below for this possible double top. Thus we have a primary potential down in the 454 even zone, a target which we have already reached, just about, and a secondary hard to reach potential target down in the 440 and a quarter zone, close to the November 2020 high at 439.5. End of quote. By the middle of 5 weeks ago, we had reached the harder achieved secondary target. Yet that was not all. As I continued saying 6 weeks ago, and I quote, "I should also note that if we manage to get below the 450 level, then we could also trigger another bigger bearish pattern, a March to date larger double top pattern, so please watch this space carefully." End of quote. Well, in the middle of 5 weeks ago, we also went below the 450 level and moved further down through the 50% absolute Fibonacci line at 425, which is a story on its own. But importantly, we now had a March to start of June larger even eve double top, with a primary target down in the 432 and a quarter zone, a target we have achieved late 4 weeks ago, and a secondary harder to reach target down in the 410 and 3/4 zone, which we reached at the start of last week, with a pipe bottom. Below the 50% absolute Fibonacci line, the next support is the December 2020 low at 414 and a quarter. one has been tested, pierced, but not as yet broken, and this is the last support before the February 24 low at 408 3/4, which wasn't that great a support, but was just ahead of what looks like a more substantial support, and that's the dark blue May 2020 today uptrend. That's right, a 6-year-old uptrend that still works, and that's currently at 406 even. Now, 2 weeks ago I commented on the situation thus: the question now is whether, much as in the various weak markets, whether the action over June is a possible bearish halfway hesitation, or a precursor to a much larger move lower, starting from late May to date. Right now, in my opinion, unlike the weak markets, it does not have the structure of a bearish halfway hesitation, especially as I suspect the support lower down of the rising dark blue May 2020 today uptrend looks like potentially ominous support. Watch this space. This view may change, but not right now. End of quote. I further added last week, and I quote, "The view hasn't really changed, but I would like to add one further pattern opportunity, and that is to possibly recognize that the whole June action could be a possible descending expanding wedge pattern on top of the other pattern ideas. Watch and see how this develops." End of quote. We have seen this develop, indeed break higher, prompted by the pipe bottom formed on the dark blue May 2020 today uptrend. It's currently at 406, out of the descending expanding wedge pattern last Friday, thus giving us a primary target for the pattern, target X2 up at 446 and a half, 446 and a half, and a secondary target X3 up at 451 and a quarter. Now, in the way, and we can easily see the impact that these roadblocks have had in this week, and the three main moving averages: the flatlining gold long moving average, currently 447 and a half, the declining green short medium moving average, currently 449, and the flatlining mauve medium moving average, currently 453 and a half. In addition to these, there is also the pink lower trend line, currently 452 and a half, of the July 23 to January 24 descending triangle, and the 50% Fibonacci line for the whole of 2025 at 454 and 3/4. So all in all, some pretty heavy duty resistances between 447 and a half to 454 and 3/4. And it makes me start to wonder if targets X2 and X3 will be reached. I've even thought about reclassifying the descending expanding wedge pattern to a smaller bear channel, which would lower the topside targets, but I've chosen not to, and look at this still as a break higher from a descending expanding wedge pattern. Kansas City wheat. The move lower in mid-May to start of June, much as in Chicago, we opened up the idea for a possible mid-April to date double top pattern. Though I have to admit, here's one very, very lopsided double top. Nevertheless, 3 weeks ago, I laid out some potentials below, of a primary potential down in the 627 zone, which was eventually reached, and a secondary hard to reach potential down in the 578 zone, right on the July 21 low and just below the slowly rising gold long moving average, which is currently 588 even. 2 weeks ago, I converted that from a potential to a target X at 578 even, and I once again stood by my comments 5 weeks ago when I said, and I quote, "Right now the secondary hard reach target looks just that, harder to reach." End of quote. This is still the case today. However, I also, back 3 weeks ago, started to wonder if the recent hesitation over June might become the corrective hesitation part of a large early May to date bearish half hesitation, with potential initially down to the 606.5 zone and the secondary harder to reach potential down in the 535.5 zone. This was, back then in early June that is, some early speculation on my part, and I thought it might not happen. But as I said at the time, and I quote, "I'd rather get it out there now and look foolish than look a bigger fool if prices started motoring in between my commentaries." End of quote. Well, last week, in retrospect, foolishly I decided to convert them from potentials to targets, with target X at 606.5, which came quite close to being reached early last week, and target X2 at 535.5. That's respectively for both of those. However, I also added, and this bit is quite important now, I added, and I quote, "But please note, I still think that target X2 may be a target too far right now, but it still fits the operation of the patterns. The only thing I'm now adding to this is wondering whether the action since late May may be the hesitation part of a large mid-May to date bearish half hesitation or not, as well as wondering if and this is the important bit, as well as wondering if the action could also be part of a diamond pattern. It's still too early to tell on these, but I keep my eyes open in case it happens in between my video commentaries. End of quote. Well, since then, the idea of a diamond pattern, well, it has taken the ascendancy and become the prime market mover here. For close outside of it yesterday and a strong move higher today over the green short medium moving average, currently at 665 3/4, and up towards the big old 50% Fibonacci line of the 2011 to 2019 move at 691 3/4. This move has spawned new targets topside and at the same time threatened the ones on the downside with retirement. I'll keep the targets below for just one more week before retiring them, just in case this all turns out to be a false break higher, which right now doesn't look like it's happening. So with this move higher, it has given us some fresh targets topside of a primary target X3 up in the 691 3/4 area, right on the previously mentioned 50% Fibonacci line, and not too far above it a secondary target X4 up in the 706 1/4 area, just over the 50% absolute Fibonacci line at 697 1/4, and under the December 2014 high at 707 1/4. So overall, a sharp volt face and a good pattern higher if we do not result in this action being a false break, which right now seems unlikely. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.